Welcome back, my awesome people. Today, I am honored to be here with Si Katara again, the CEO and founder of Tapp Alpha. Now, this is the fourth time that he's been on this channel. If you haven't seen the last interview, that is okay. Please check it out because a lot has happened. We're going to be looking at TSPY's 1 year anniversary, and of course, the TDAQ, their newest ETF that is going to be ringing in the bell very, very soon. And we're going to talk more about that and we're going to dive deeper into that. So if you have not seen the previous interviews, that is totally okay. Stay tuned to the end with this and you will be able to get so much more information on such a unique, not only option strategy, but also seeing how far Tapp Alpha has come in the past year. So Sai, how are you doing, my friend?
Jacob, great to be with you. Thank you so much for having me back on. It's been wild actually to think about the first time we chatted and then just all of the things that have happened in that last year. So appreciate you having me on early, and it's great to be back.
Definitely. And, I'm looking forward to the bell ringing for TDAQ. I know the last time that we spoke was a few months ago, but I do remember our first conversation when T-Spy just first came out. I was one of the first few, I guess you can call me an influencer, that kind of pushed T-Spy, and it has done amazing. And so I can't wait to dive deeper into that and see what you've been up to and what T-Spy and Tapp Alpha have been into. So let's just get right into it. Sai, for those that have not seen our previous interviews, can you just tell us about yourself? What inspires you to start Tapp Alpha? And can you provide an overview of Tapp Alpha's history and its core mission?
Yeah, absolutely. I appreciate it. It's been an interesting journey to get, to where we are today. I didn't come from the finance world at all. I was a computer engineer by trade. So worked in Silicon Valley, started a technology company, and then built that for many years, ran it for 17 years. But in October of 2022, I sort of had that moment where you look and you're like, is this the limitation of what my impact is going to be? And I knew I always loved finance, but I didn't exactly know what my role in the world would be. And I think the other thing that put a real sort of exclamation point on thinking about it at that time was 4 months from the October of 22 when I left my last company, we're going to have our first baby, our baby girl, and that really focuses sort of your desire, the impact that you want to make, and sort of the role model you want to be. And so I thought to myself, I think I can probably make an impact in different parts of the world. And so in October of 22, I ended up deciding to leave the company that I had founded and run for a long period of time to try something new and pursue the next adventure. I didn't exactly know what the next adventure was going to be, but you know what they say, necessity is the mother of all invention. And we had to figure out in our immediate family how to make ends meet. And so I don't know if you remember, but October of 22, the markets were way down. I didn't want to sell my SPY shares to make ends meet for the family. So I remembered a strategy my dad taught me, which was covered calls. But the new thing that kind of came up was daily covered calls just became available back that same quarter. So I tried it. Fast forward a couple months, just the option premiums on top of my SPY shares was helping cover the lion's share of a family's mortgage. And that was sort of a core moment when I said, wait a minute, this is so helpful for us, so helpful for our family. Maybe there's a way to take this and scale this kind of benefit to help other families like ours. And that was the real driver behind Tapp Alpha. And put a lot of things together: the finance experience, the learnings, the technology pieces, and put it all together and found a way to bring TSPY to market, which was one of the earliest of its kind zero dated covered call strategies on the S&P 500. And for us, the whole driver has been about access. How do you provide access to powerful financial tools for everyday investors and advisors? And that's sort of been the nexus of building TSPY, the same driver for TDAQ, and then the product suites that we're sort of hopefully bringing in the future. This is a really important time for the inflection of the business because we've now had a product in market for a year with TSPY. So you have track record, especially, it's not just track record. The last year has been really interesting from a market dynamic perspective. A lot of ups, a lot of downs, a lot of volatility. And so you see, is your strategy hardened? Does it work in different market environments? And we put it to the test, and it's come through really, really well to be one of the best in its category. So that was what sort of brought us here to launching Tapp Alpha, to launching TSPY. It's been honestly an incredible experience for us and for all the people that work on the products. And ultimately, it's something that I'm here for the long haul. This has been a game changer, and just excited to make impact as we continue to grow the business.
You know, sometimes you might have a plan for yourself, but life can take you in different tangents. It can take you on different paths. And I'm glad that you are on this path. And I know you mentioned the strategy. I know Tapp Alpha, especially for the two main ETFs, TSPY and TDAQ, which we'll get into very soon. But Tapp Alpha uses a daily covered call strategy for income generation. Can you tell us more about this strategy for those that don't know?
Yeah, so daily cover calls are kind of, they're new-ish. They're new from a financial tool perspective. The main difference, they're just like a regular option. The only difference is they expire every day. And so like with the engineering brain, I was like, this makes a lot of sense to get more precise with how you actually manage risk and how you manage a strategy. And that's one of the key differentiators between the products that we're putting forward is we've sort of purpose built this risk engine and the tools and all the stuff underneath to manage short dated covered calls. Three big benefits of the zero dated covered calls that we really like. Number one, the premium opportunity is about 4 to 4.5 times the same risk level of a traditional 30-day covered call strategy. That's a powerful benefit because the risk reward ratio is actually significantly improved compared to what you would deal with a standard strategy. The second one is actually really important. We are true zero DTE calls, meaning we're only in play with our option strategy for 6.5 hours of the trading session. That's what we really shoot for. We have flexibility to do overnight rolls, but we only do that on special occasions. And the reason that's important is because when markets move overnight, you don't want to get stuck on the wrong side of the trade with your option position. And there's sometimes big moves after hours. That's when earnings happen. That's when macro sort of economic news comes out as before market opens. And so with zero-day calls, you can really hone in on risk mitigation. And then the third thing, you get more swings. You get 21 or 22 tries over a month to reposition your strikes in order to manage risk. Versus if you're using a traditional option strategy, you get one swing. And that just gives you a much higher likelihood that you can, closer track the performance of the underlying versus getting kind of behind, which is sort of one of the things that covered call strategies is like the Achilles heel, where people are like, well, I feel like I just want to buy the underlying because I don't want to get behind using the covered call strategy. Zero dated options actually really help you potentially perform better depending on the market conditions in those cases.
And you know what? You're absolutely correct. And especially when it comes to covered call strategies, on this channel, we love covered call ETFs. And so it's obviously mitigates risk, but at the same time, you do get that income that you otherwise wouldn't, especially when your underlying stock barely pays a dividend. I know sometimes like the S&P 500, many of the stocks don't pay a dividend because they're growth stocks. However, when you have a ETF like TSPY, not only are you following the growth, but you're also getting that income. And so not only does Tapp Alpha use the covered call strategy, but you also have FinTech technology that enhances and improves efficiency and innovation. How is AI or artificial intelligence utilized on Tapp Alpha's platform?
It is really powerful. So one of the things that's hard as a person, as a human, is taking in large amounts of data, making sense of it, and then turning that into actions. AI is really good at that. And so we actually leverage large language models as well as more procedural programming to pull in large data sets that kind of give you signals on what the market is doing in real time, which is really important when you're trading sort of short dated options. And so we end up taking that data and information, putting it into a large language model that actually helps us provide two things. One, kind of like a co-pilot for portfolio management to help you decide, hey, what's our opening position going to be? And then most importantly is just ongoing risk mitigation. You got to watch these signals through the day, and they're telling you a story. Nothing can predict the future, but when you put a few things together, you can manage the risk a little bit better. You say, wait a minute, these four things are showing me something that kind of feels a little bit outside of the strike zone. Let's take a defensive action, maybe to provide more headroom, or maybe we roll to the next day. You can actually translate that into action. So the the capabilities now are stunning with what you can do with AI. And finance, honestly, it's one of the best sort of sandboxes to do so because it's really digital driven, it's data driven, and you're moving bits which ultimately correlate to market performance. What better place to apply AI to sort of help you get an edge?
Exactly. And it was inevitable that AI was eventually going to get involved with finance, investing, and so on, because if it's already touched the other sectors, then it's about time it's touched the investment sector. And I think by using AI, we get, we don't have to deal with all that tedious information research gathering when AI can do it for us while we focus on the more important things. Now let's look at TSPY. It's been 1 year since TSPY has been launched. It is currently their 1 year anniversary. So how does it feel, Sai, for TSPY to reach its 1 year anniversary and also to cross $50 million in assets under management?
It has been an incredible journey, ups and downs. And the irony is when things are going well, you learn some things, but when things aren't going well, that's when you really sort of pick up some powerful foundational lessons. And there's a lot of things that we've learned over the last year. One of the biggest lessons I think we learned was, theory, what markets should do, that doesn't trade. It's, ultimately it's how do you prepare for the things that are unexpected? So April was a really interesting month for us to learn that lesson. In theory, what happened in April in the markets shouldn't happen. It's an 8.5 sigma thing, meaning very very unlikely. But what you learn is it does. So what do you do when you're managing a publicly traded fund to do your best to maneuver and manage the risk through those markets? And that was one of the key things I think that created an inflection point for Tapp Alpha and for TSPY. So the Achilles heel of option strategies is when there's a big market move to the upside. Because what covered calls do, you can cap how much you participate. April 9th was a massive move in a couple of hours to go 9.5% to the upside. And so what do you do in those moments? That has really informed one, we managed through it pretty well, but we hardened our strategy afterwards to make some core changes to our execution. And if you look at the charts, from April 11th, when all those changes kind of propagate to the price of the TSPY, you can see the striation that starts to occur between TSPY's execution, the S&P 500, and then some other covered call strategies as well, because not all execution are the same. And I think that sort of learning to say, what can we take from this? How can we use the data and information that came out in the market to really provide differentiation for how we actually do the strategy? That was such a powerful learning for us. And then the coolest thing is all of that intelligence is built in to the underlying FinTech platform, which can apply not only to the S&P 500, but also to the Nasdaq 100 for future products, or in theory, any underlying security. And that's the coolest thing, where you go through these market experiences, but how do you codify what you learn so you can scale the benefit out to a broader set of people? Because that's our biggest, driver. How do we take these things to touch the largest audiences that we can? And finance plus technology plus ETFs are an unbelievable combination to do exactly that.
And I think the challenges, the ups and downs of the first year, whether it's stocks or even in any business, is usually the best year for learning. You make 1,000,001 mistakes, you learn from it. However, in this case, I'm assuming that there weren't many mistakes, because you guys have been breaking records left, right, and center. And so, what were some of the key factors you would say that helped with TSPY's success only in its first year? Because this is an amazing milestone.
It's, one thing that I was worried about in coming into the finance world and ETFs is like, oh, you don't have the structured finance background. But honestly, like, coming in and not having that structured finance background is what allowed us to sort of come in with fresh eyes, as engineers do, and ask questions that maybe folks that have been steeped in finance their whole careers wouldn't ask. So, like, yeah, tons of mistakes occur. But what's cool about it is when you start asking questions and getting to the why behind it, you learn, oh, you don't actually have to do it the way that people think you need to if you end up asking the right questions and pushing through to really to get under the hood of the why. And I think that, it was a challenge coming in, but also like really energizing because it was a fire hose of learning from, the option strategy piece aside, like that's something I've done for several years since zero DTE options were available. But how do you run a 40 Act fund? What are the compliance requirements? How do you actually execute a strategy where there's a big bank as a custodian and then you have to collateralize the positions elsewhere? What are the things you can do to streamline that process? And we came through and ran through the wall the first time a lot of times, but that optimization actually gave us a bit of an edge where we have a competitive advantage where we can execute more than one trade in a day because of the systems and processes we have put in place. And the only reason that we kind of were able to do that was, one, we kind of looked at things and said, oh, we don't have a standard ETF process that we fall back on. Let's ask the questions to really see if we can shape it in a way that's going to be more effective. And that's exactly what we did over the last year. So really, really amazing process, but hard, really hard, but worth it at the end of the day. And I'm so excited. Like the thing I love about ETFs is they're transparent. So like you can see how every product out there does in the marketplace. And it's just so empowering to come in and see that you can actually potentially lead a category, even though it's your first product out of the gate, even though it's your first time doing the formal side of it, you can start to see, oh my gosh, we can actually make a huge impact. And this is an amazing industry to do that in.
I think you're on the right track. You don't have to be traditional, even if the other traditional structures might, look at it like, I don't know if this is going to work, but you know what? Times are changing, especially in the investment sphere. So I think what you're doing is amazing. And I think that your unorthodox way of, developing a stock, creating incomes, and maximizing gains, I think this is the future, especially with your AI compatibility. I think you're on the right track. And I think those traditional might have to take a few notes from you. And so,
I love it.
looking back in the 1 year, what would you have done differently with TSPY?
I think one of the things I might have done differently was we were about 5 months late to market. And one of the reasons was we really were trying to make the implementation of our vision of it come to fruition, but it wasn't necessarily with the right partners that had the same innovative mindset. And so when we were trying to get this thing to market, we kept pushing to say, like, so I'll be specific. One thing that's really hard when you're doing a strategy like this in a ETF is that the custodian has to keep all of the assets in its under its roof. But because of 40 Act rules and compliance, they can't actually trade the derivative directly. So you have to actually do the trading of the option position somewhere else. But they're connected because you can't trade the option unless you have collateral to basically back up the positions that you take. So making that connection is hard. We were trying to fit a square peg through a round hole with one of the partners that just didn't have the infrastructure to do it. And me being like a stubborn problem solver kept trying to like find 12 different backups to be like, okay, we'll figure out a way and we're going to find a solution to do so. But at the core, there just wasn't a way. And even if we found a mechanical way to do it, the culture wasn't there for us to be supported in being innovative. Once we replaced that partner, I wish we'd done it earlier, but finding, it's not just the blocking and tackling, it's the mindset. Finding the right partners that have that innovative mindset, that are open to coming along with you and saying, yeah, we've never done it this way, but we're open to doing it this way. And let's find a way to actually get it done and let's do it quickly. That unlock for us has really changed how we're able to bring products to market. So we just went through our onboarding process and deployment process because we're launching TDAQ tomorrow. And the whole process was so smooth because we have a group of partners and organizations that have that same innovative mindset. And that's going to help the speed of product development. That's going to help the quality. and that's going to really help us continue to blaze trails that otherwise we wouldn't have a chance to do if we didn't have the right teams around us. So that's one of the core things I think I would have done very differently had I had a second bite at the apple.
I think a team makes everything. If you have the right partners, if you have the right people positioned in the right roles, leaning onto their strengths, I think that can make a whole difference between a successful company or a successful moment compared to a non-successful moment. And so, what would you say this achievement is kind of telling you? Is this achievement telling you, hey, this strategy that we created actually works? What are investors saying about it?
It's a good question. I mean, I would say take a look around and see directly what they are saying. But one of the key things that we really tried to do is create something that is unique in the marketplace because we're a true growth plus income product. In the market, you see things that are pure growth, and then you see products that are pure income. But we didn't see a lot that sort of had a balanced approach. And there was a big like personal why behind why the balanced approach was really important for us to try and pursue and deliver. And it was one of the things that really helped my personal experience. And it was something that I felt passionate about that could help others. And the balance approach between growth and income, I love the idea because you're building a nest egg that needs to grow, but that nest egg has the potential to actually kick off income that you can use today. And that combination is really powerful for the right people in the right setting. If you go too far to one extreme or the other, you're sacrificing, and there's always a trade off. But finding that good middle ground was something we wanted to bring to market. I feel really proud of what we're able to deliver. And looking at the performance, I'm over the moon with where we landed in one of the tougher markets that we've sort of seen over the last 15 years to actually deliver on a strategy like this. So 1 year in, I try to I'm an engineer, so I constantly want to improve, and I love to just say, okay, this is where I messed up. And if you take ownership, that's really empowering because you're like, what can I do differently to not mess up that way again? But I gotta take a step back sometimes and just celebrate for a second and look. It's been 12 months of running a fund. We far exceeded our goal of 50 million, was our goal, like a super stretch goal. And we did that. We got to 60 million in 1 year and 1 week. And we're continuing to grow without having the institutional sort of support that some other ETF issuers have. This is true grassroots. And that's also what, I want to say a huge thank you to the subscribers on your channel who have like been passionate about these types of strategies, really interested to learn about it, and then have adopted it. That's the only reason why companies like us can actually create a foundation to start. But every company, think about the big ones, they all had to start somewhere. And
Exactly.
having a chance just to actually be put on the map and to deliver these types of solutions, like for me, this is the happiest I've been professionally my whole life. And the best part is just the messages I get from investors that are like, this is a core part of my portfolio. I sleep well at night because of this, and I'm able to deliver the income. And even through the crazy market of April, like you guys were still really consistent on the income that was delivered. Those things for us and what that empowered them to do and enabled them to do, that's the whole point. Like that's what gets us out of bed. And I think I'm just so grateful to have that kind of opportunity in this industry now.
I'm actually so happy for you guys. I remember just, starting off with you guys pretty much on the journey, seeing the growth, seeing the new innovations, and I am very, very happy for you guys. This is a highly massive achievement that I think many people would wish that they were in. So definitely, Sai, congratulations on that. And so when looking at TSPY, are there any new features or innovations as it grows beyond the 50 million? And also, what type of momentum do you see moving forward into your second year?
Oh man, I'm having so much fun with the innovation. I'm like a mad scientist on the weekends. But some of the stuff is just, I mean, game changing from just being able to deliver it standpoint. So one of the big things that we did recently, we're small as an advisor, but like we have a large institutional backing with all the groups that are helping us. And so one of the things we're able to do was take the trading process that we have and directly connect our technology to the institutional backbone that allows you to execute trades super fast and super effectively. That normally would take probably 4 to 6 months and a team of 3 developers to do. That's something that we're able to build directly and robustly in a way that took our trading time down to the milliseconds. And that's helpful from a returns perspective because now we're able to snatch option premiums that are there very quickly versus if it takes you time to fully execute it, sometimes you'll miss out on a proper position. So things like that, being able to, as an organization our size, we're able to punch way above our weight because of the amplifying power of technology that's helping us really compete in the marketplace that, you know, 10 years ago, you'd need a huge operating budget to deliver. And we're able to do it in a way that keeps our overheads low, so our fees are reasonable. And the value that we're able to actually bring to market is really starting to show in some of the performance that you're seeing in what we're able to get done. So I'm super optimistic about this getting better and better and better. And you're seeing it even at big corporations where the innovation, AI comes across as like a buzzword, but it's real in the efficiencies that it can help you deliver. And there's no more evident place than finance to see how that stuff can come together. So it's a pretty special time.
It really is, because I think we're in a time where those that do not use AI and technology compared to those that do, there's going to be a big gap and a big separation. And I think we discussed this last time where, for example, during COVID, a lot of businesses thinking, oh, I don't need to go digital, I don't need to go online. However, it was the companies that did go digital that survived, and those that didn't, unfortunately, didn't survive. So I think with Tapp Alpha moving forward, you're going to have an amazing suite of ETFs utilizing tech, AI, and I think it's going to be the best way moving forward. It's going to help the investor. It's going to help the institutional investors as well. And I'm looking forward to the journey. So now let's take a little pivot and let's talk about TDAQ. So this is the newest ETF that is coming up. You did say it was being launched tomorrow. So for those that, because I know in our last interview we did go into detail with TDAQ, but for those that didn't watch that, what is TDAQ? What inspired the launch of this new Nasdaq ETF?
TDAQ is essentially it's the identical strategy as TSPY, but you're pulling out the S&P 500 and you're plugging in the Nasdaq 100. And what's really cool about that is all the infrastructure that's in place, all the learning that's occurred and been codified in the underlying FinTech will now apply to the Nasdaq 100. Nasdaq 100 is a little different though. It's got a little bit of a different fund profile and a little bit different performance. And one of the biggest differences between the S&P and the Nasdaq is the implied volatility, which for the options side of things, what it means is there's a little bit more juice that's out there to go and harvest from an income perspective. So that's one of the really interesting pieces of being a good complement. There's two things. One, different investors like different indices in their portfolio. Some love S&P, some love NASDAQ, some love a combo. So this now rounds out, I think, two of the biggest indices that are applied in people's portfolios. And then second, the volatility and the option premiums that are available from the NASDAQ are a little bit enhanced compared to what the S&P 500 delivers. So that is going to change some of the characteristics and the outcomes of the TDAQ fund compared to TSPY. One of the biggest ones is going to be distributions. I haven't committed to what that distribution kind of goal or target is. We have a lot of data on it. But I think one thing that's fair to say, it's likely going to be a larger number than TSPY's current 14% distribution as the target. And the main reason for that is just because of the characteristics of the NASDAQ 100. And then the other piece too, NASDAQ 100 is known for being like the technology index for people that want broad-based coverage in some of the biggest names in tech. That's the engine that's powering the growth side of it. And then the option sort of strategy and execution that we've already built is what's going to power the income side of it too. So it's just a really, it's an exciting moment to take all of the stuff that we've already built and not have to run through those walls again the same way. You
Yeah.
get to run through different walls because you've solved many of those problems. And I think that's what I'm most excited about, where you can start to see true scale across different products that many investors have reached out and said, hey, when are you guys doing a NASDAQ version? When are you doing a NASDAQ version? Well, the good news is tomorrow, September 4th, it will be listing and available for purchase at all of the main brokerages. So super excited that we finally got to this point, and happy to be here the day before we actually get it out the door.
And you know what? I actually love TDAQ because if you look at the Nasdaq, it is tech heavy, and most of those tech companies actually don't pay any dividend, or if they do, it's like 0.1 or 0.2%. And so by exposing yourself to the tech sector while getting some income, I think that is a win-win situation for any investor. So I am looking forward to the update on what TDAQ can offer. And so, how do you anticipate TDAQ performing in this current market? So of course, I've asked everybody and they always say AI and tech is the future. Nasdaq pretty much encompasses tech. So do you think that TDAQ might outperform the TSPY, or what are your thoughts on that?
Yeah, it's one of those things where, if you look at just the historical performance, just take the two indices and put them together, and you see what Nasdaq has done compared to the S&P 500. S&P is a bellwether, and there's lots of different industry diversification within it, but the biggest drivers of the S&P 500 are companies that are highly tech focused, big tech. The Magnificent Seven, now Nvidia coming in. So you see that, and that is really the focus of what the Nasdaq 100 is. So that's what's really exciting about it, where you think about early adopters and actually the ones that are shaping AI and the future of what computing is going to be. And the craziest part is seeing how that computing capability is impacting industries even far outside of tech. And that combination is going to create, I think, a boom that we're starting to see right now continue to grow over time. And this is a great way to directly get exposed to it. So that's, I think, one of the reasons why we're super excited.
Oh, 100%. And you know what? There's so many different Nasdaq ETFs that use options, covered call strategies. However, after looking at TDAQ compared to those don't hit as much. They don't give you those maximized gains that usually people on my channel and even myself are looking forward to. So TDAQ, in my opinion, is going to revolutionize the tech sector ETFs because you are being exposed, you get the income generated, and I mean, TSPY has already been a proven concept. The strategy's been a proven concept. And after 1 year, I mean, you guys have done incredible. So I'm only looking forward to TDAQ's 1 year anniversary and seeing where that lands. Because I think it's going to be, as you said, it's going to be crazy. It's going to be blown out of the market because a lot of people say 2026 is going to be the golden year, the golden age. So if it does, I think TDAQ is going to be poised to definitely succeed. And so I know we talked a little bit about the challenges of creating a public ETF in the past year. You went through ups and downs. You made 1,000,001 mistakes, but you learned from it. So what advice would you give of someone who is trying to launch a public ETF so that way they can learn from your challenges and not make those mistakes?
One thing I would say to anybody who's thinking about launching a publicly traded ETF, know that it may be new, but trust your gut and trust your own ability to sort of ask questions. And it's actually really empowering if you can be the person in the room that always raises their hands and says, what does that mean? Well, why do you do it that way? Because that's what creates innovation. That's what creates breaking the mold. And that's what really helps you drive the industry forward. ETFs are This industry is exploding. It is unbelievable to see the types of innovation that are coming and the types of new people. But the only way it continues to move forward is if you get fresh eyes with fresh minds coming into this industry. And so, like, please, if you're thinking about it, you're curious about it, like, don't hesitate to reach out. The only way that I was able to even maneuver through a lot of these processes was because one of the key guys at Tuttle Capital Management, really helped us understand things, helped us get connected to the partners, which is one of the most important pieces. But without those types of influences that are just willing to be helpful, it's hard to know what doors to knock on. So if you're thinking about it, continue to ask questions, come in with fresh eyes. We need more of that here. And if you ever need input, reach out to me because I'm happy to be a resource. It's something that has really been a game changer for being a part of an industry like this, but we need more different thinkers and different minds to come in, and would love to be a resource.
You know what? Thank you for that advice because I definitely agree with it. Because in the past, I would say 5 to 10 years, ETFs have definitely boomed, especially with thematic ETFs, option strategy ETFs. Just recently, we have now the crypto slash Bitcoin slash Ethereum ETFs. So I think in the future, ETFs will pretty much be the main, I would say, driver of investing because a lot of people, they may not know what companies to choose. So why not might as well go for something a little bit safer, which is an ETF or an index ETF. And I think with TSPY and TDAQ, that pretty much covers two of the major indexes. You have the SPY and you have the Nasdaq. And so to my question, do you think an investor should have both? Like, do they complement each other, or do you think that each ETF has a different type of investor that they're attracting?
I think, a lot of it's hard to sort of give one broad piece of advice on that. I can share a lot of the advisors we speak with, and then also individual investors do keep exposure to both because they offer different characteristics. So that's another kind of key piece. Like I'll be planning to sort of put TDAC into my own portfolio because of some of the characteristics that it can provide. One of them is obviously the higher volatility, which is higher income, but then also with everything that's happening with innovation today, it's a key piece of exposure that I want to have, but I've also got a longer timeline that I'm shooting for and different goals. So really depends on your goals, but a lot of the folks that we talk to that are sort of similar to me do keep exposure to sort of both underlying indices in their portfolios.
Well said, because I mean, you can't really go wrong with an index. I mean, we've been in a boom the past, I would say, 6 months. S&P 500 breaking all-time records. I believe it's sitting at about 6,500 right now, and I think it's only going to go higher and higher as tech, AI, and the future sectors start improving. Now, if we're looking at, for example, the future of Tapp Alpha, the strategy works for SPY and Nasdaq. Is there a chance you guys might create an ETF for the Russell? Maybe, I know I ask you this every time, but maybe a crypto ETF? Or what are your thoughts on the future of Tapp Alpha's suites of ETFs?
Yeah, it's a good question. I think one of the core things that we as an organization want to make sure that we're able to deliver is sort of a balanced approach to folks that are sort of low to mid on the risk spectrum. There's a ton of stuff that you can do that's higher risk, higher reward. It just depends on what your goals are. So one of the things that we actually might do to balance that out is actually partnerships with other organizations that may have, as companies, different risk profiles in different audiences. So we may build some ETFs that provide some light leverage, for example, for these types of funds. The crypto side of things, when we talked last, I was sort of sharing like, yeah, crypto for Tapp Alpha probably wasn't a good fit. But as time is going on, we're seeing the regulatory environment change. And when you start thinking about, stable coins and things like that that are tied to real assets, there's a certain crypto-based risk profile that actually might be a fit for future products. So since the last time we talked, our horizons are expanding, but we never want to lose sight of our core value of providing powerful but also risk appropriate solutions to everyday investors and advisors. We want to make sure that we're staying close to those core values because it's really important from a trust perspective for us. And then the last thing I'll say that was really important, but also like it felt different when we came to the industry was just the level of transparency that we believe is important, which is full transparency. It is incredible the level of trust that it's able to build, and it's the only way we want to operate. So being open, being clear, not to convince anyone to do something or not do something, just to see you need this information to make decisions for yourself and your family for what's best. And it's our job to make sure that we're providing that information to you so you can make that decision. That
You're
philosophy has served us well over the last year, and it's something we'll continue to do into the future.
And that also makes it easier for the investor to do their due diligence when things are transparent and open. And I always tell my audience that please do not just invest just because your neighbor said to invest or your grandma said to invest. Actually invest based on the information and the knowledge that you've learned. And I think with Tapp Alpha, I mean, you guys have already done tremendous in this 1 year, and the growth and the ability to improve on your ETFs, create new ETFs, but also have this such a unique strategy that is maximizing gains that a lot of companies, a lot of firms are not utilizing, whether it's because they're not open to being digital, or because maybe they just don't know how to use this type of strategy. But I am very, very happy and confident because I have tons of TSPY and I'm very happy of where it is. And I'm sure tons of my audience members have TSPY as well. And so we're looking forward to TDAQ's drop because I think Nasdaq is not going anywhere. You have the Mag 7. You also have these little mini companies that are revolutionizing things: quantum mechanics, quantum chips, robotics, healthcare. I think where the floodgates of technology is going to open, and I think the two indexes that are highly going to benefit will be the S&P, of course, and the Nasdaq. And I think with TSPY and TDAQ, having those in your portfolio, you're pretty much covered in such a broad market. So Sai, you have always given us amazing wisdom and expert information every time you come on this channel. But before we conclude this interview, is there any additional information that you want to give us based on TDAQ? And also, I mean, T-SPY's 1 year anniversary, that already is a milestone in itself. And I know coming up with the second ETF is also a milestone. But is there anything else that you want to throw out there to the digital world, especially before TDAQ opens up tomorrow?
Just a huge thank you to the viewers on your channel and the folks that are do-it-yourself sort of retail investors that, I mean, I am so impressed with how smart people are, how curious people are, how much people want to crack open under the hood in order to understand what's going on. And it's so great because it's really important when you're making decisions for yourself, especially for how impactful finance can be on your life and your family's lives. And honestly, we wouldn't be anywhere without the support and the investment of the retail community, because y'all move faster than institutions and advisors do. And one of the things that we sort of put out there was, we wouldn't have the resources to do a second product until TSPY got to 50 million, and TSPY got there because of you guys. And so just huge thank you to the support, the belief, and the vision that you guys saw, and you saw the approach and you backed it up with investment, and that is unbelievable to watch. And to that end, I think the other thing that's really encouraging and energizing is just how much people want to get under the hood. It's so important, and that's one of the key things from an education perspective. Continue to be curious, continue to crack under the hood, because a lot of the stuff that's on the tin, even if it's an ETF, it doesn't necessarily mean it's going to be the right fit for you. So just continue to be curious and really dig in so that you can make great decisions for your financial futures. And just thank you. Super excited for what's next. And we would not be anywhere without the support of folks like you.
Well, we do appreciate it. And, we wouldn't be here without people like yourself, because then we wouldn't have anything to talk about. And also, just a few years ago when the whole COVID lockdown happened, sometimes it can kind of be a blessing in disguise, because I think that's when more people started opening up their minds to investing, to stocks. You have apps like Robinhood that are attracting the younger crowd. And I think that is also a catalyst to not only Tapp Alpha success, but also my success and a lot of investors and ETF issuer success. So thank you, Sai, as well. So audience, I will, as I always do, I will have Sai's information in the description box. So please check them out. TDAQ, I know this video might drop about a week or a few days after it drops. So please check out TDAQ. TSPY is ripping it. So if you're an S&P investor, an index investor, please check out Tapp Alpha's TSPY and TDAQ. As we said earlier, you can't really go wrong with Nasdaq. You have the big boys. You have Microsoft, Apple, Google, Alphabet. You have these players. So if you believe in the future of tech, if you believe in the future of AI, then TDAQ is definitely the ETF for you. Hey, that kind of rhymed. But please check them out. Sai, I am so looking forward to another sit down with you, seeing where TDAQ is at that point, and also looking forward to sitting with you in a year as well, with TDAQ's anniversary. But I am highly, highly looking forward to your journey, Sai. You have been an amazing, amazing issuer of ETFs that people like myself, people like my audience, definitely we need it. We're tired of betting on one company, so we want to start betting on a broader system, a broader ecosystem when it comes to investing. So Sai, thank you. I know it's a busy time, especially with a new ETF coming out tomorrow, but thank you for sitting here with me today. And audience, you know what to do. I'm always bringing you the best guests with the best information, so please support Tapp Alpha, and please make sure that you like and you subscribe. And until the next time, stay ranting.